We're talking about private equity investments now, which have been generally described as capital supporting any long-term investment strategy, giving another type of different options of funding options with a unique, with their own unique pros and cons. Now, with a yet to be passed 2016 budget that has a 2.2 trillion naira deficit, is this option worth looking at? Joining me now to talk about this is Damilola Aloba. He's the Director, Transaction Advisory Services, Ernst & Young, Nigeria. Good morning to you.
Good morning. Thank you for having me.
Let's just do an assessment of private, equity investments in sub-Saharan Africa. How would you assess it?
I think there's increasing private equity investments in Africa. Going by our recent study, shows that we have more private equity investors coming into Africa beyond the local private equity investors in each country, and we have more multinational private equity investors and also pan-African private equity investors. So it tells you that there's significant opportunity for them to be coming in. And it's also important to note that there's a rising middle class in Africa. If you look at Nigeria, for example, that has significant, more than half of its population comprising of middle class population. And so the opportunities are there. So this is why the private equity investments continue to play a vital role in the development of businesses in Africa.
But then how would currency volatility, for instance, be a major factor in terms of having, private equity investors?
Well, I think currency volatilities cut across different dimensions. In Nigeria, for example, that remains an issue. It's something that needs to be critically considered when you're making an investment. And more so, it's also something that affects the valuation of companies at the point of making the investments. So, for example, you have a company that is highly, that valuation is trending upwards, but in a case where investors are bringing in their funds, the value of their investment reduces by virtue of the fluctuations in the currency. But nevertheless, there are different ways to look at different structures that the private equity investors bring to play to kind of at least manage these fluctuations in the currency. The opportunities are tremendous also, but then the currency fluctuations eat into the returns that the private equity investors will get at the end of the day.
So, based on what you just said now, does Nigeria still have the capacity to attract private equity investors?
Well, I think based on our study, once again, I think currency fluctuations is one of the challenges facing as part of the market. And we're not going to say that because there's this issue at hand that investors are not going to invest. But what is important is the fact that the opportunities are tremendous. You see companies in the financial services space, based on our study, we've seen more exits in the financial services sector, in the retail and consumer space, as well as even the healthcare sector. And this is because of the value, the potential returns that investors stand to gain in those sectors, bearing in mind the currency fluctuations. The currency fluctuations didn't start now. It's immense now, probably in the last 1 year, in Nigeria particularly. And that's why also you see a case where the existing investments made by private equity investors they retain their investments as against exiting from their portfolio companies, because they're looking for the right opportunity or right time to exit from those companies, probably when the exchange rate is favorable and the currency is favorable and the environment is also favorable. So beyond just the currency, there are also other factors that needs to be considered as a whole. But bear in mind that we are having a more mature private equity ecosystem in Africa and even particularly in Nigeria, because you have more and more of a pan-African play, a multinational private equity set of players operating in this economy. So that comes to mean that there must be those opportunities that are there that are seen. Again, it's important to note that beyond exit going to trade buyers or through trade sales, you see private equity investors exiting their investments and selling to other private equity investors. And from our research, we've seen that in 2014, it was about 14% of exits we looked at. But then in 2015, it has increased to about 18%. So we see that, meaning that, as I'm exiting my investment as a private equity investor, I'm selling to another private equity investor, but this time around, a more sophisticated private equity investor or a multinational private equity investor who has seen value through the strategic and operational improvement measures that the private equity investors have brought into the companies that they've invested in.
Is that what was, was that what was responsible for your assessment when you said over the last 2 years, 4 countries have accounted for 2/3 of private equity exits, including Nigeria? Nigeria accounted for about 10%. Yeah. South Africa had the highest. What was responsible for this? Is it what you've alluded to, or was there more to it, apart from the fact that they sold to bigger multinationals in terms of private equity investors?
I think it's a case of more private equity investors coming into the African market. So, but based on our study, beyond the fact that those countries have accounted for significant private equity exits, we've seen that most of those exits are actually from 3 different regions: Northern Africa, Eastern Africa, and Southern Africa, excluding South Africa. But then we've seen also that that in West Africa there's a decline in private equity exits, and also in South Africa. But the Nigerian situation is mainly because the private equity investors want to hold on to their investment in their portfolio companies in order to see the right time to exit their investments. Now, this is evident by our findings from our report, which shows that in 2015, you have an average hold period of 6.1 years, as against 5 years in 2014. So private equity investors tend to hold their investments for a longer period, waiting for the right time to exit those investments.
So what's your outlook for Nigeria for the rest of the year in terms of having whether there's P&Es coming in or exiting?
I think the outlook is for these private equity investors and the portfolio companies to begin to take more lateral approaches to developing growth and exit strategies that will compel local and international investors to come and invest in Nigeria. Some certain sectors are very attractive till now and into the future in Nigeria, like the financial services sector, the healthcare sector, education, retail and consumer goods, and the energy sector. So those sectors are prime sectors that investors continue to look into to make their investments. So we see this as what will happen within the next 1 year thereabout and beyond.
Thank you so much, Damilola Aloba, for coming on the program this morning and sharing your perspectives with us.